Let's be real for a second. If you're a Canadian incorporated small business owner, an owner-operator, a consultant, or a tradesperson, you already know the drill. You started your business to do what you're actually good at, right? Not to drown in a sea of paperwork or spend your precious weekends staring down a dreaded shoebox full of crumpled receipts. But, well, here we are. Welcome to this explainer. Today, we're going to completely calm the overwhelm of corporate bookkeeping. We're stripping away all that complex accounting jargon and focusing on building a simple, repeatable tracking habit that actually works for you instead of against you. So let's just address the elephant in the room. Why do most expense tracking systems completely fail? We always tend to beat ourselves up over it, right? We blame our own lack of discipline, or we say we just don't have the time. But honestly, the actual root cause is almost always overbuilt systems. You absolutely do not need a heavy, complicated operating manual just to track your daily expenses. The reality is, most of your bookkeeping problems don't actually come from having too little detail. Nope. They come from trying to maintain a system that is just way too heavy for a small business. A complicated system demands perfection. And what does that do? It causes burnout, it leads to buried errors, and it pretty much guarantees a massively stressful year-end. But a simple habit that's consistent, it's super easy to maintain, and most importantly, it gives you clean, usable records. Okay, so here's our roadmap for today. 1. The cost of complexity. 2. Categories and monthly updates. 3. Receipts and clear separation. 4. What good enough is. And finally, 5. Build your tracking habit. Let's jump in. Starting with Section 1, the cost of complexity. I really want to reassure you right out of the gate here, your expense tracking doesn't need to sound like it was drafted by a corporate lawyer. It doesn't need intense accounting jargon. It literally just needs to happen regularly. The ultimate goal is simply to build a tracking habit that keeps your corporation's records usable. That is the whole shebang. If you can look at any transaction 6 months from now and immediately know what it was for and why it was a business expense, your record keeping is absolutely doing its job. Moving right along to Section 2, categories and monthly updates. To actually put this into practice, we're going to implement a highly pragmatic 5-step habit builder. Step 1, clear categories. Step 2, monthly routine. Step 3, save and match receipts. Step 4, separate spending. And Step 5, review totals. If you can wrap your head around this visual map, you've basically won the battle against bookkeeping overwhelm. Let's break down those first 2 steps right now. Step 1 is all about using a very small number of clear categories. You absolutely do not need 50 different line items. Just use broad categories that cover most of your spending, things like office, marketing, travel, meals, and professional fees. But listen up, because this is absolutely crucial. Do not bury owner-related items in your normal expenses. If an owner-related item is ever unclear, just flag it. Call it needs review or owner review required. It is so much better to leave a clear flag for your accountant than a buried mess they have to untangle later. There's this fantastic quote from the Built to Thrive framework that hits the nail on the head. The system does not need to be detailed. It needs to happen regularly. I absolutely love this because it gives you total permission to stop overthinking the tiny details and just focus on the habit itself. A simple system that you actually maintain every single month is infinitely better than some highly sophisticated system you only touch once a year. And that brings us perfectly to Step 2, the monthly routine. Once a month, just sit down and update these basics for your expenses. You want the date, the vendor, the amount, the category, where the payment came from, the receipt status, and the GST/HST if it applies. And that's it. Capturing these basic elements on a regular basis is really all it takes to keep your records clean and audit ready. Please don't wait until tax season. Do this monthly when the memory of what you bought is actually still fresh in your mind. Which leads us to Section 3, receipts and clear separation. Step 3 is saving and matching those receipts. Because let's face it, we all know thermal receipting fades in your wallet faster than a magic trick. The CRA requires actual proof, and credit card statements on their own just won't cut it. So embrace a 20-minute monthly habit. Snap a photo of your receipt immediately. Annotate the business purpose right on it, like lunch with client X, and save your bank statements as PDFs. Saving and matching your digital receipts right away ensures that your support documents can be found easily at your end without you having to completely tear your office apart. Now for Step 4. I really need to speak directly to you on this one, because this is the golden rule of operating a corporation. Ready? Do not pay for personal purchases through the corporation. Just don't do it. Use a dedicated corporate bank account or card. You want to strictly avoid mixing personal and business activity. And on the flip side, avoid paying corporate expenses out of your personal pocket unless you're tracking them incredibly clearly. If the corporation absolutely must pay for something personal, remember our rule from a minute ago. Flag it. Do not bury it in your ordinary business expenses. Clear separation is literally the foundation of a healthy business. Section 4. What good enough is. So how do we know if we're doing good enough? We implement step 5, review totals regularly. You just take a step back and look at the big picture. Check where the money is actually going. Are certain categories unexpectedly spiking? Does the spending still make sense for your business goals? Is there any missing support, or have owner-related items accidentally gotten mixed in? Checking these simple totals regularly acts as a massive safety net. It ensures errors are caught early, way before they compound into a gigantic year-end headache. So, what does good enough actually look like in the real world? Let's run through a rapid-fire checklist. Your system is working perfectly when your expenses are recorded regularly, your categories are consistent, receipts are easily retrievable, the support status for key transactions is visible, your totals make sense, owner-related items are clearly flagged instead of buried, and your corporate spending is cleanly separated from your personal activity. If you can check those boxes, congratulations, you have a highly functional, effective expense tracking system. See? Totally achievable. Finally, Section 5, build your tracking habit. Here's the core takeaway I really want you to remember from this entire explainer. Corporate expense tracking works best when it is simple enough to maintain. A highly functional business doesn't run on panic, catch-up work, and pulling all-nighters right before tax deadlines. It runs on predictable, calm routines. Doing just a little bit, consistently, is the absolute secret weapon of the most successful owner-operators out there. If you are finally ready to ditch the complicated bookkeeping and build that calm routine, use the Built to Thrive Corporate Expense Tracker and the Corporate Expense Categories Reference. They're designed specifically to help you track your expenses with consistent categories, regular updates, and easily retrievable receipts. Let me leave you with this to think about. What could your business, and honestly your own peace of mind, feel like if you implemented these incredibly simple tools today? Stop letting messy records drain your energy and start building a tracking habit you can actually maintain. Thanks so much for joining me on this explainer, and I'll catch you next time.